Hello, welcome to our third Options Trading with Kevin Q&A webinar. I'm here to share with you my thoughts about the market this week as it relates to options trading, and then to share my 10 years of knowledge and experience with you all. Thank you all for your interest. When I see this many live listeners, viewers of the recordings, and votes for all the times that folks are free, it gets me all pumped up. We had 25 folks join live last time and over 100 folks view the recording. Little disappointed in the amount of views for episode 2. Hasn't quite caught up to episode 1 yet. I know it's been out for fewer days, but if you haven't seen episode 2, the one on August 4th, that one is a can't miss. It is on my pinned Twitter as well. That one has a lot of knowledge. But I'm so glad more of you can join this time. I definitely see some screen names that I don't recognize from last time, so that's great. Quick reminder for those who do not follow me on Twitter, follow me at Options with Kev, not Kevin, Options with Kev, K-E-V. Then you'll know when my next live Zoom webinar is, and I also post random trading tips throughout the day. If you like the series so far, please retweet, share the videos, the recordings. I want as many people to benefit from my experiences and knowledges. And also, if you're watching the recording on YouTube, please hit the subscribe button as well. That'd be great. We're adding a quick disclaimer. We're at that point. I figured I should add it. The thoughts and ideas on my webinars, my Twitter account, and any other form are my own opinions and are not investment advice. That's basically one of my takeaways from this whole thing is do your own research and decision making. I'm here to share my 10 years of knowledge, mistakes, and experiences of options trading and investing. As I've mentioned before, I will never give a specific trade call on what to buy or sell, but we can definitely analyze past trades, talk in depth about how to improve your trading and various strategies and setups. The goal is for all of you to be self-sufficient, or at least more self-sufficient. And I hope you all enjoyed my last webinar. That one was really important. Take it all in, watch it again, watch it in 5-second intervals. No, just kidding, probably 5-minute intervals. And really the part I said about going slow, going small, develop that strategy, that consistent profit strategy over a long period of time before sizing up. I don't care how big your account is. If you're not doing well and you don't want to lose more money, don't go big yet. So that's that. And let's get started on the fun stuff. To recap sort of the end of the week and the week as a whole, we got a typical jobs report week. I said Sunday night, my first webinar, that I was expecting probably a drop earlier in the week and a rally, which is what we pretty much got. Though most of that action was Monday and Tuesday for SPX option trades. Wednesday to Friday was kind of slow, and there wasn't that great of a risk reward for the SPX. The jobs report itself, I will admit, I was a little wrong. I was actually quite wrong. I thought it was going to be soft, 700,000 down to, 400,000. It's funny. I actually had a calendar reminder for this month to watch out for a hot jobs report because a lot of states were ending that extra unemployment benefit. So I thought, maybe that would impact it. But then, everywhere I hear around here, it's like hiring's tough. Wages are going up. They can't find enough people. So I guess I was a little biased by that. So I thought it maybe would have been a softer jobs report. The jobs report is tough. It's not an easy one to predict. The estimates were all over the place. I remember a few months ago, I forget what month it was, but we were really worried about inflation and a hot market. And then people were expecting, I think the average estimate was we were going to get 1 million jobs that month in that jobs report. And then it came in at 400,000. So if they can't do it and I can't do it, then, I know what I don't know. I wasn't really trading. None of my trades were like super reliant on that. It was more just that drop early in the week in the rally. That's just more of a jobs report run up or not run up, but run, what I'm talking, like a reversal into the event. I didn't trade as much based on the event, which is always could be a, 50-50 or hit or miss. So jobs report's hard. I would have come into this after Friday's action saying the market looks okay. We are dropping a little bit on the futures, but definitely a hot jobs report. You don't want that for the market. But then again, the virus concerns are back, folks, unvaccinated folks and all that. So in theory, jobs report bad, but virus concerns good for the market. It balances out what the Fed may be thinking about. If we just had a hot jobs report and the virus was tamed, then I don't even want to know what the market would have done then, but it's a little hard to say which of these factors the market will weigh more. Right now, the futures are down, not a whole lot yet, but you know, we have, Friday was a chop day after the report, which happens a lot. Sometimes the real move isn't until Monday. A lot of data Fridays, job report Fridays, or Fridays with data, they can be odd. Sometimes, if we're dropped, or if we're down hard early in the week, we do like a relief rally, we unwind hedges, all that fear that didn't come to pass, that kind of thing. And then the following week, do we continue or do we reverse? Or as we saw this past Friday, the market just kind of pinned or held up, and then you kind of have to see what the real move is on Monday. Now the futures are down, I think, was that roughly 15 or so? A lot of folks, or my even first reaction a lot of times is, damn, why didn't I just buy puts on SPX puts on Friday? Well, it's hard because there have been times where we open up even and then we drop, or we don't do, or the move isn't until Wednesday. Like you can't, like it's kind of a gamble. You can't really predict. Like you could buy it, but who knows? There are times where it's a bit more obvious. I think last month's monthly OPEX Friday, where we tanked, and then Monday I think we gapped down. That was a little bit more obvious. I didn't play it, but I have that in my mental note for next time. But we held up, and I wasn't too confident. I was thinking downside, but I didn't know if it was going to be on Monday. So that's why, to me, it wasn't a good setup. I didn't do many trades Thursday or Friday. If you watch my past webinar on Wednesday, a lot of my trades were Monday through Wednesday. But my two main trades were pretty much one a day, and MicroStrategy on Thursday, and then SPX Thursday into Friday. And then folks know I traded NVAX, vaccine maker, Tuesday through Wednesday. We saw that huge rally with Moderna, BNTX, NVAX, but then they pretty much all sold off after their earnings and different events. This is why you don't chase, and also you shouldn't hold all your positions into an earnings or an event. Especially with a huge run up, you really need like amazing news, because either you're going to sell the news if it met expectations, because we already ran up, or you get a bad news, like I think NVAX had US submission of approval delay or something like that on their vaccine, so it sells off too. So if you've run up into an event, stocks up whatever 10, 20, whatever percent more, you're up 300, 500, 1,000% on your options, then you got to take some, risk off and manage your account. Like I did with my Sava trade a few weeks ago on the news, or not even a few weeks ago, 2 weeks ago, for the biotech data. For my MicroStrategy trade, I was waiting all day Thursday. I was figuring out some Fidelity stuff. And then we had some Bitcoin news. We had some general crypto news with Ethereum. So crypto started running. Sam got in some plays. I got in some plays, sort of separately. But from Sam, you could have gotten Fridays. You could have gotten this coming weeks. It really doesn't matter. I did warn folks it's not for small accounts, because the premiums are usually like 10 points or so or more, depending on you can't buy too. You can buy really, really far out, but then you're looking for too big of a move potentially. But it's not for small accounts. I did warn that. I hadn't really traded it before. I missed it a few times in the past few months, and I learned from those experiences. So when I saw the news, Bitcoin running and different things, so I was ready to get MicroStrategy that time. And just to recap the week as a whole, I just made up this number, but it's roughly 98%. I didn't have time to calculate exact number. Probably 98% of my profits in the past week were from the one trade I highlighted each day. I think it was SPX Monday, Amazon Tuesday, NVX Wednesday, and then MicroStrategy, and a little bit of an SPX on Friday. Pretty much those were my main trades. And I include the rolls as like the same trade. It's a continuation of a trade, I guess. The only other trades I did were some really small, tiny. I was getting queued. I was trying out some things on random stuff. I was experimenting, essentially, things I hadn't played before, different things. So those, maybe I was down a little bit, maybe I was up a little bit, but I was up, I haven't actually had time to calculate how much I was up since Wednesday. Let's just say between 50 and 60,000. So maybe 5 or 10,000 more after Wednesday. So, those random positions I was trying out was like $500, $1,000 positions. So it really was just, I was trying them to learn stuff from them, if that makes sense. So that's my recap of the week. quick thoughts on looking forward. What were the futures at? Still 15 to 16, not looking the greatest. If you recall, we were in a range, and now let's look at my screen. Let's look at 3 months or so. Yeah, so if you recall right here, you see for the last few weeks, we were in this range here. It was like 44.20. This is a futures, and then this was like 43.70-ish. And then if you look closer, oops, that's not gonna work. Let's just do this. We on Thursday, or I think it was Friday, we just peaked over that range. Same thing with the NQ. Oh, this is terrible. NQ NASDAQ futures. So right now we kind of have a potentially a false breakout sort of setup where it peaks over and then reverses, or we could just be back testing sort of prior support, prior resistance, which is now support. We're right around that point. See what happens, overnight and into the morning. I'm not calling for a fake breakout yet. I'm not, I'm just telling you that we're reversing right now. That's one potential way we go. I'm not making any specific calls for tomorrow at this point, unlike last Sunday where it was a little more obvious. This week is going to be interesting. Got to be on your toes. Looking forward into the week, the big event of the week is Wednesday morning before the market opens. It's CPI data, Consumer Price Index. That was a big one, if you remember, in May when we tanked Monday, Tuesday, Wednesday into CPI. I was like May 10th to 12th, maybe right around there. We also have Jackson Hole, late August Fed meeting. It's not an FOMC, the monthly meetings, but it is a meeting where the Feds talk a lot about stuff. And what will happen with these two events, both this week with CPI and that week with Jackson Hole, and as we saw with the jobs report, SABA, or anything with an event, you have two different parts of that event. You have the action leading up into the event, and then you have the action once the event or data is released. And those can be different. Those can be continuations. Those can be various different things. So we'll have to see what happens or if there's any reversals. Like for instance, if Monday through Wednesday or Monday and Tuesday, there's this CPI inflation overheating fears, if that and the market's going down and the data comes soft or not as scary, then we rally, right? I'm not saying that's what's going to happen. Just like that's how you think about it. If we don't actually go down that much, we'll see what the data is. Is the data going to be a surprise? I haven't looked into it if they're expecting a super hot, or we'll see what the sentiment is. So basically, there's what that people expect, what the market expects, and then there's what actually is. And depending on the difference in those two sort of sentiments or numbers, that can affect the post-data reaction, if that makes sense. But we'll see. I really don't have anything specific right now in terms of how we trade until we see how the morning is. But yeah, there's the action Monday and Tuesday and going into the event, and then post Wednesday and later, and so we see what happens. Now I'm just going to bring up a few topics that folks have brought up. I'll start with sharing my screen. So this is my screen. This is not exactly what it's going to be like, but it's roughly what it is. I just switched over to Fidelity this week. So I just built my watch list like a few hours ago. But these are the things I watch like every day. I have the regular index for SPX. I have the futures. I have for the SPX and NASDAQ. I have XLF. I mentioned how that was important. I'll go over that a little later in detail on that example. I have the VIX. I have the 10-year yield. I have Amazon because I feel like that's been moving a lot when the market's been moving up and down. I have Google, very similar. And then usually those, if I have room for one more here, this will kind of be saved for something that's not normally one of these, or maybe I would, depending on if there's one. Basically, these 6 are kind of always there. These are dependent on what's been moving more, and usually at least one will be like I don't know, TTD has news or something that's not any of these has like individual stock has news, and I'm in the position or something. I'll put it up. But these 3 are more flexible. But basically, I can get away with about 9-10 charts or so, and then I can see different things. This is my watch list. It's as close to as I can get to it after just building it today on a new platform. But I track SPX, XLF, Apple, Amazon, ARK, Google, Goldman Sachs, ISRG, just because it has that split run potentially. MicroStrategy because Bitcoin's running. I haven't figured out how to get Bitcoin on there. I'm not sure if Fidelity can get it, so I might have to put on somewhere else, but I might have Bitcoin as one of my charts. I don't know. I haven't figured that out yet, but I'll figure that out. NVAX, because that could still run as one of the vaccine makers that hasn't run as much. NVIDIA, Shopify, Snow, because it's been around that resistance number or support number, depending on where it's at. And I guess that's right around there. Tesla, just because, Tesla's always has the potential, though not as much this year. Zoom, because, virus stuff. ASTX, that's my, if you follow me on Twitter or some places, that's not really a short-term day trading trade. That's my top long-term play. And we can talk about that another time, but that's why I have it on here, because it's my pet project kind of thing. And Sava, because I traded it, a while back, and just monitoring it if anything happens. So that's really it. I'll be building a second watch list for like my long-term positions. They won't have premiums or anything. It would just be like individual stocks. I haven't had a chance to build that yet. And of course, you can build more lists for, other reasons or purposes. But this is the day trading. This is what I stare at, 99% of the time. And you see how I build the premiums. So like SPX, this is where we close. So I have, 2 strikes up relatively close, and then I farther out ones. Similar with Amazon. Some of these are based on resistance support levels. Some are just based on round numbers. ISRG, I'm really only looking for upside because of a split run. I don't really know how to play it on the downside, you know what I'm saying? So I don't really have puts there. MicroStrategy, kind of the same thing. I'm looking for Bitcoin to run. I feel like I'm more confident in playing it, for a run on calls than I am on puts. NVAX, kind of same thing, because these are things ISRG and MicroStrategy, not things I follow all the time. It's more because of recent events. So I'm only playing the upside mostly. Things like ARK, Google, Goldman Sachs, NVIDIA, Shop, Snow. Some of these things are things that, NVIDIA, Shop, not Snow, but some of these, I don't play options that often. I hate playing Shop. I never seem to do it right, but they're good to watch, the ticker itself. Snow, because it's right around that resistance number. Tesla, just because it's Tesla. Zoom, I sometimes play Zoom. So, but you can see how I have different strikes. And then throughout the day, this will all update. So, back when I was learning options, all I had was, I didn't have any of these premiums out here. So I was just watching the common price. That only tells you so much. Let's see. Someone wrote, oh yeah, I know. Yeah, the trust. Yeah, I could follow the trust. That's not, yeah, I could definitely do that too. That's definitely on one of my watch lists, but thank you for that reminder. But yeah, so, and what you can do is, as an example, okay, say SPX, we're on Tuesday and the SPXs have expired. You want to just change it to Wednesday, Tuesday. All you have to do is, you see, this is SPX weekly. 21 is the year, August, 08th, 09 is the date. You just change that 09 to, I guess, 11 for Wednesday. And then you just change, depending on what it is, you see P is for puts, and then you just enter the strike and it'll update. I'm not going to do it right now and mess it up. But point is, you can make these updates throughout the day, at the end of the day, at the beginning of the day, and watch all that. And then, yeah, you just watch premiums and not just the common price. So you can see, as something like Snow approaches resistance, how the premiums react. And I'll give a few examples of that, and things like that. A couple examples. So Sava, I need to get Sava on here. So let's get Sava on here. This is E-Trade, by the way. I'm new to Fidelity. I haven't really figured out their charting, and I'm so far not a huge fan of it. I don't believe they do futures on Fidelity, unless I'm wrong based on my research. So that's why I'm sticking with E-Trade for charting. But let's do Sava. Let's see if I can get this to what I want it to be. I'll give you some examples of how premium. We got to go all the way. How do I do this? Do I go to a specific date? Whatever. We'll find the date in a second. It's not that far back. Anyway, still getting used to a lot of things. But okay, so here, Sava, here it is. Here's the day. Here's the day we're looking for. This is the day release data. This is the open on that day. So you see how it opened up a little bit after the data release, and pretty much it just tanked. But when it opened up here, it opened up and over, I think it opened at all-time highs. It was kind of odd. It didn't open as high as I thought, but I was like, maybe they'll run after it because there was some pre-market shenanigans. How was I sold 2 minutes into the open, and here's why. Here's why I did it. I have to find, hold on, I gotta find the option chain for this. Give me a second. Give me a second. I need to find August 20. I gotta find the 195s. Uh-oh, that's not what I want. That's what I want. August 20th, here it is. So I had the 195. So if we go to, since I can't show you in real time when I was doing it, I will go to the time and sales for, what is this date? 7/29. So 07/29/2021. Oh, we don't need all hours. That doesn't matter actually. I think that's good. That's fine. So now we have to scroll. Okay, this is, I'm gonna minimize this a little bit. Give me a second. Oh, that's not what I want to do. There we go. Let's minimize that a little bit so I can get this thing and I can go all the way down. Okay. So I've said this before to folks. I think on my last webinar too, but I had the 195 call at 100 contracts. So that's about a 100K position. So they opened at wait, that's the bid. Where is the bid? Where's the ask? There's the ask. Why is there bid exchange? I don't want that. But if you look, let's move this over here. Bid ask. So okay, there we go. You see right here. Level 2. I don't really watch level 2, but I have in the past, just to sort of like what what orders are in the order book. It can be useful, but it's not necessarily all the time. But yeah, anyway, Saba, it opened here, but remember, I didn't know any of this at the time. I didn't know it was gonna drop. So it opened at 10 to 12. Bid and ask was 10 to 12. It was filling at about 9 to 10, 9 to 10. 10 to 12, 10 to 12, it obviously fluctuates a little bit. 9 to 10, so right about, if you look, I believe it was, for the first minute, and then if you look right about, where was it? Let's see, right about here, looks like. So if you see here, the bid ask was, it was 10 to 12, it was 9.5 to 11.5, and then you see within that like 30 seconds, it pretty much dropped one from, it held for about a minute or so, it held that 10 to 12 ish, and then boom, it dropped to 9. The bid ask dropped from 9, basically 9 to 9. Essentially, it dropped basically a couple points, point or two, and that to me was a sell signal, because that the premiums were moving first, and then within that, then we dropped 25 points in 5 minutes. This is pretty much 5 minutes right here. So that to me was a way how the premium, after opening at 10 to 12 for like a minute or so, a minute or two, and then suddenly it was holding it. The ask was pretty much at 12, and for a little bit, and then it right about here, about a minute in, 30 seconds a minute, it dropped. So that was like a sell signal for me. I dumped for about 90K position at the time. And another way I can show you is SPX for, what is this? I have to use Mondays. Give me this. Let me do it this way. I don't need that. I don't need that. So let's look at the SPX 4450s for Monday. I actually have that on the screen. I actually have that. So let me just go to time and sales again for the 6th. SPX over here, looking over here. So if we just look at the 1-day chart, is that it? No, that's not right. That's not expanded. Wait, I'm confused. There it is. So we opened, wait, there it is. Okay. Okay. No, I don't want that. I want the 5 minute. There we go. Okay. So I believe we opened up a little bit on the SPX and then we ended up down. So as an example, we're looking at the 44.50s for Monday. You could have looked at the 44.40s for Friday. I know those have expired. I don't know if I can pull that up, but let's just use it. It would have been more obvious if you're looking at Fridays, but let's just look at Mondays. But you can kind of see the same thing with the bid ask changing. I don't know why it's affecting that. So let's scroll down here. So we opened. What the hell? Don't ignore this. This is pre-market trading, which I will now be able to do on Fidelity. But we opened roughly, bid ask was, so it went up, as you can see, we opened up a few points. So, the bid ask was, 6.5-ish, that kind of range. And then actually, let's go back to 1 minute because then they'll really, so really, we opened up and then we kind of made a lower high. And you can obviously see that from the chart, but you can also see from the premium. Looks like right around the open, maybe let's see that's like 45 minutes in, give or take. So if you go to roughly around that time, too far. We're still at 6, right? 6 is good. That's what we saw, 10 minutes ago at the open. But if you see right here, right before right before this drop really happened, look at the premium. We're still at 6.6. But then suddenly you see it's dropping, this is all in the 9:46 minute. So these are seconds. These are in mere seconds. That 6.5 bid that held for the first 15 minutes or so, suddenly we're in the low 5. And we dropped like more than 0.5. We essentially dropped 1 in the matter of a minute. And those are the moves you want to see. The chart helps. I look at the charts, as you can see, but when combined with premium, that, if you were trading, if you had Fridays and you wanted to see if we were going to break higher or lower and you were in profit, that would be a self signal with the premiums as well. And you can notice the same. I can show you the same example, but I won't do it just to save time. But if you see near the end of the day, we had these moves. I don't care about these moves. If you cared, I don't recommend playing Friday options for these last. This is a shot in the dark on the most days. But if you had looked at the premium, say for the 44.20s, the premium as we go down here would have been increasing. And then, at some point the premium would reverse, depending on whether you were looking at calls or puts, kind of like the same thing, but you would see it in real time. The bid ask would change, and it would lead this. So that's kind of how you look at premiums there. And also, for instance, I could do the same with snow. Another thing you can do with premium, and I won't show it here because I think you guys get the gist. Snow's been at this, 272s, 275. Somewhere in the 270s, there's been a resistance number. And if you look at the different calls, whether you look at last week's or this week's, if it hits the resistance number, the premiums won't jump up. The premiums will spike. They won't just hold or go up like 0.1. They'll spike once it gets through, or maybe it'll get to the resistance number, kind of drop, or maybe not fail, but definitely drop. It'll approach that resistance number again, and you'll see what the premium is. So it'll have, let's say the premium was for the 280s, where just use numbers here. Say they were at 5 when it was approaching the resistance the first time it dropped. An hour later, it goes back up. If it's still at 5, it's probably not going to break through yet. But if it's suddenly showing 5.5 or 6. Again, some of this is in the matter of seconds or a minute. And some of this, this is nitty gritty. You have to be paying attention to premiums. And that's how you compare premiums and that kind of thing. Maybe if we do a midweek webinar, I can show you it as well with, current week's strikes and premiums. So that's an example of that. So that's I'll answer more questions later and do more examples, but that's sort of just a general overview of what's on my screen and what I can do with it. I want to get through the questions not too much longer. Someone asked to show me on August 3rd how I saw that when I was watching the XLF. And so if you recall, let's just look at this. Let's look at it this way. let's just look at it this way. Let's put these two side by side. So on August 3rd, if you recall, I had puts going into Tuesday. It dropped right at pretty much from the open, and then we made a higher low, and then we rallied the rest of the day. And one thing I said I noticed on Tuesday, if you look more closely, zoom in a little bit. So let's just call the rally. I'm just going to call the rally at the first sort of big candle. This was what, 10, let's just say 10:15, give or take. Let's see, where did XLF bottom at? Well, that's before 10. That's 9:55, looks like, right? So about 20 minutes prior to the SPX bottom, XLF had already bought. So that was an indicator. Remember, we were already at major support. So that was already an indicator. But then XL, I think NASDAQ I think took off at right around this time, which is what made this take off. But if you see here, XLF had already been like consistent. It wasn't just a bounce. It was going up the whole way. So that was another indicator. So we were at major support. XLF was turning. And of course, NASDAQ at this moment also, I think the futures or whatever you're looking at also bounced. So all those indicators together told me it was a sell the puts point. Honestly, the fact that it was major support by itself probably was enough, but this was like all the stars aligned. How do you, like if you were buying puts here, I think I've mentioned it before, buying puts at support, bad news, So I wanted to show that visually, even though I mentioned it verbally last time. How many viewers we got? Okay, we got some. Okay. A few other things. Had comment on Twitter. Was saying, I mentioned on Friday on Twitter that it was a chop day, chill day. Someone was saying that was great advice because a lot of times those, OPEX days, whether it's SPX or OPEX Fridays for other stuff, can be a killer. I've had, there were times when I do those trades and I get a 10x and then I get hooked. And then over the next week or two, I try to replicate that trade, do it 5 or 10 times and give it all back. So I try to stay away from those unless there's an obvious, great setup. 1 second, do something real quick. Okay. And then we had another question on stop losses and risk management. I'll repeat it again briefly. If you're doing options trading, no stop losses. That'll get you in trouble because an option could easily drop to for, if you're buying like an Amazon for not much of a reason and then suddenly jump 5. So you get screwed. This isn't like buying shares of something. Instead of doing a stop loss, you buy less. So if you wanted 10 contracts for $1,000 and you want a $500 stop loss, then just buy 5 contracts for $500. That's the easiest way to do it. Then your stop loss is basically 0. Doesn't mean you're going to sell it at 0. It just means you effectively made your stop loss happen without getting, shaken out by just normal option premium movement. That's not anything, worth taking action on. In terms of risk management, I didn't get a follow-up to my question of what that person meant, but I'll just kind of cover it in general briefly. I manage risk in multiple ways. One, I only put a certain amount of money in my account. I have more than $50,000 as a whole in my portfolio, but every week I start the week with $50,000 in my options trading portfolio. That's a way to manage my account. If you're struggling to consistently make profits and you have $50,000, you probably shouldn't start the week with $50,000. You might only need $5,000 or $2,000 if you're doing what I said in my last episode 2, where you're just buying 1 contract, 2 contracts at a time to trial and error what works for you. You really shouldn't be. So that's risk management 101, is just putting less money in. Another thing is buy things that you can only buy things that you understand, in the sense of like, if someone says, oh, I think this is a good buy, or I'm buying this, you have to know why they're buying it. Are they right, first off? But basically, what's the reason? What's the why? Do you see the risk reward? What's the likelihood of success? Do you know what resistance level or support level you're looking for to get out? What are you looking for? If the premium is 2, what are you looking to get? Are you looking for 5? Are you looking for 10? If you can't answer these kind of questions and quickly, because it's, I'm not talking necessarily in 1 second, but a few seconds, 30 seconds, a minute before the option moves, if it's going to move, then you got to do what I said in episode 2. trade really small, or if your account is too small to even trade small, paper trade until you figure it out and you can answer these questions every time you get in a position. Because if you can answer these type of questions, then you'll pick the right positions, you avoid the losers, you won't buy at the top, you won't chase, and then your account will have consistent success, if that makes sense. And if you're still having trouble with this kind of thing, please during Q&A, I'm happy to go over like, hey, I bought these kind of things during the week. What do you think? And I'll probably pester you with questions, be like, what was your logic? Why did you buy it? What were you looking to get? And we can kind of, talk it through. I don't exactly know how many questions I use it, but it's about 3 to 5 questions if you've been paying attention. Types of questions, why did you buy it? What are you looking to get out of it? That kind of thing, etc. To make your decision making. I want you to be consistent on that. And lastly, before we get to Q&A, this all takes time, as I mentioned. One listener remarked after hearing my second webinar that I liked what he said. He said there's a logic and an art to it, which really makes sense because it takes time to know why you're getting into a trade, what the opportunity is, what is the risk, what is the success rate, what is the exit goal, the exit target, premium, what premium you're looking to get. This takes time. You have to, watch premiums to know like what premiums should be and how they move. Once you have the hard numbers, you got to watch. You got to have experience reacting to news. As an example, I mentioned this last time and I'll repeat again. A few examples. A few weeks ago, TTD had that news about Google delaying their cookies upgrade or implementation, whatever it was. So it was good for TTD. And the news came 2 minutes before the open. So the premiums weren't juiced because it didn't really gap up. So you could have gotten in, I think they were at like 66. You could have gotten like the 68s at 1 or 2. And I think it hit like 78 of a high. So that would have been like a 1 to 10 or a 2 to 10, like a 5X or a 10X. That's great risk reward. Plus it has actually legitimate news. On the reverse side, NVAX, after I'd already gapped up on Wednesday on news and it was running, some folks were still buying it after it had run. Let me show you that on the screen actually, since that's a more recent example. So what? Oh, here we go. So yeah, this run right here. So on Wednesday, ignore Thursday. That it ran a little more, but on Wednesday we gapped up here, right? We gapped up. You could have actually still bought it here and hit that, But I know for a fact, when this was going vertical, and when stocks go vertical, you're thinking to sell, not buy. I know for a fact people were buying here, like, oh, it's gonna go to the moon or whatever it may be. But this is the worst time to buy. So that takes experience. I used to do that. I used to think like, oh my goodness, we're taking off here. We're gonna go up to here, But no, it's experience to know. And I think like 225 was a resistance level, if I remember correctly. You can just look here. Look, 220. You obviously need to look at premiums and other things, but like, look, 225 right there. Boom. So that's just an example of, not chasing. And I know folks were chasing Moderna and also NTLA. That's a genomics play. Like those had already run a lot. And people were FOMOing and chasing it. If you missed it, you missed it. If you miss it, if you have already missed it, then you're buying the top. You're going to zero. You're top ticking it. You're top ticking a call, which is not good. And and then you're pissed, and you don't want to make the same mistake. But instead, you chase again, or maybe maybe it drops. Like here, it drops, and then it starts going up again, and then you're like, oh wait, maybe it's gonna break again. And then you buy calls again, and then it goes back. You can't do that. You're just guessing at that point. You can't be guessing like that. And that's how I took that kind of compounding of mistakes is how I took $1 million to $100,000 in one day. Not kidding. You have to learn by watching others. A lot. I think I mentioned this before. I'll repeat it again. When you're not in a trade, pay attention, because folks will post like what the news is, why they got in a trade, what they're looking for. They might not post all the details. You can ask if you want, but there'll be little nuggets you can get over time. It's not something that, folks are not going to write a 1-paragraph, thesis, an abstract to their thesis on why they're getting in, but you can get nuggets over time. Last point before Q&A. Someone mentioned when they were messaging me, they were struggling. They were down on Thursday. They said they were down. I think they were up 10K, but down 12K in their trades. And they told me they made 30 trades on Thursday, 30 trades. If you remember, I basically made 5 trades, plus rolls, plus some, ones that I was experimenting. But even all that probably didn't add up to 30. But point is, I made pretty much 5 main trades. I've done that before, though, where I made, 30, 50, I don't even know how many trades, kind of like what I was saying here with NVAX. You chase, you mess up, you sell here, it's going up, you buy calls again, you sell. Oh, maybe you buy puts, like you're just guessing. Like that's how you get the 30 trades and end up being down. But you have to go back to episode 2 about my strategy on how to pick winners and avoiding losers and know what you're buying. If you're making 30 days a trade, 30 trades a day, you better be killing it. Otherwise, you're trading way too much. Like if you're struggling, 1 trade a day is plenty, depending on what's going on. It's much better to watch, learn, or just listen to webinar 2. That kind of thing. So now we're going to go to Q&A. Please, folks who have been here before, you can virtually raise your hand, or you can type a question into the chat box. To raise your hand, there's either a ... more button or a participants button, but there's an ability to raise your hand, or you can just type in your message. If you want to talk to me, I would love to talk to you actually through voice versus chat. But yeah, let's get some questions and hand raising. I don't see any questions yet. Folks can hear me, right? I haven't been talking to myself this whole time. That would be fun. Give you guys a minute or two. I'm gonna take a sip of water while y'all are pondering the meaning of options trading. No questions? Come on, folks. Give me a question. Any question? Aha, we got a question. Not really. Do you ever look at IV when you look at the option price? Not really. That's something that I really just, from experience, I just know sort of what I'm looking for. I don't really look at all that information in terms of like future volatility and stuff. I guess my IV is in my head. I don't really like look at all that, the numbers that the different platforms give you. That just depend on what I think the setup is, or what the news is, and what the premium is. The current premium expensive or not? And one example I gave of NVAX was here. This example. So I had calls from the day before, but I sold, I think here. I could have sold here or even here, but I sold here. And then I think I bought again, and then I sold it like roughly up here. But then when it was getting to here, I was looking at the premiums, and it was not worth it. Basically, if you were looking, I think the premium like $30 out on a Wednesday was like $5, but then the premium, let's just look like you can look at here, like even this Nova MVX had dropped. But if it hadn't dropped, if you look right here. So you see right here, premium, we're basically 10 out of the money are what, 6? Let's just say 6. And then, that's 35 out of the money are 2.5. And if you get a certain move, so basically if we get a, 20, 30 point move, basically you can see what the premium would be. But on Wednesday, what happened was 30 points out were, I think I wrote it down, 30 points out were 5, but premium at the money was basically like 7.5. So a 30-point move, you would get 5 to 7.5. And that basically because the premiums were really expensive already. So for a 30-point move, which is what? More than 10% of the stock price, that's a pretty big move. You're only making 50% on your options. So that's just terrible risk reward right there. So I don't really look at all the other stuff. I just kind of look at something like that and be like, that was terrible. That's why I sold here, got in here, ran this, and I was like, I'm done. I'm not playing this anymore. It's expensive. So obviously I could have held longer and just not sold, but that's a different story. And then obviously tanked. So that was easy. That was fun. Any other questions? Any hand raising? Someone raised their hand. I want to talk to someone. So far, I've gotten at least one person I've talked to. Do people know how to raise their hand, or are we just all taking in what I've already said? I'll give you guys about 30 more seconds for questions because I can definitely wrap it up. What are people's thoughts on what I've said so far? Any follow-up questions? I wanted to get to questions, so I didn't go like even more in depth, but I can certainly go more in depth or any follow-ups on things that I've shared so far. But this was a taste of what I look at, premium setup, take a screenshot of this. I guess it'll be recorded, so you'll see it later. Okay, well, thank you all for joining us, or joining me, I guess, and your fellow traders. I hope this was helpful, some new material and looking at, premium setups and different things. I'll put this up on YouTube. We'll see if I do a webinar midweek, just depends on my schedule and what's going on. But yeah, thank you all for joining me. And I'll see you next time. So have a good rest of your evening and good luck this week. Remember, go slow. Don't overtrade. See what happens. Have a good one.